There's something very, very cool called the Rule of 72. You can look up a YouTube video, they explain it, but it's basically compounding interest, and it explains how the interest rate that you're earning on your investments, you divide that into 72, that will give you an average of how many years it takes your money to double. So say, for example, we get an 8% rate of return on our investment, divided into 72, we know our money's going to double every 9 years. Great place to invest. So we want to be looking at that with investments. But then we look at the debt side, that piece of plastic, that credit card we get from our financial institution to borrow money. Average interest rate is 19.99%. I actually think it's gone up now to 21.99. But if we take that interest rate divided into 72, our debt is doubling every 3.5 years.
Crazy.
So if you ever carry a balance and you look at the statement of your credit card company, it will say something like, if you continue to make the minimum payments, it will take you 60 years to pay this off, something like that.
Welcome, fellow entrepreneurs and goal-getters, to Entrepreneurial Elevation, Unleashing Greatness Within, with myself, your host, Kelly Beveridge, and my beautiful guest today, Lisa Bekolay. And I am so excited to have her here because we're going to be talking about a topic. We're going to be talking about money and financial education. And what I love about my podcast is if there's something that I want to get better in or be more educated in or learn more about, I just think, who do I know that could teach me this? And then I have them on my podcast. And so Lisa is that person when it comes to financial education. So I'm super excited to have her here today. She is a financial professional. She's partnered with the company WFG World Financial Group. And what's special about Lisa is that she is a mom of 11. And in her part-time, she has been able to earn they've got rings at their business, and she's been able to earn the $100,000 ring and really create a sustainable business for herself part-time. And I think that's amazing. She's a wealth of information. She's credible. She's somebody who I think of when I think of integrity. That to me is Lisa. And so I'm just excited to chat with her today about finances so that I could learn, and those of you in the audience can learn as well, so that you can set yourself up to win when it comes to your finances and your future. And so, Lisa, if you can come on, and before we get into the questions I have, I would love to learn just a little bit more about you and maybe just share your story. Like, how did you get into the financial field and then develop a passion for educating people around their finances?
Oh, yes, absolutely. Love to share. So if you had met me 10 years ago, which, by the way, I am so privileged to have been working with you and getting to know you these past 6 months. It's been incredible. But the Lisa now is very different than 10 years ago. And if you had met me then, I absolutely was not looking for a career. I was a busy mom of 11. My youngest was 2. So a homeschooling mom with a 2-year-old, 4-year-old, 6-year-old, 8-year-old. I keep going up. And I thought my life was set. This was something very early as well in my marriage, that we had decided I would stay at home, take care of the children. He would go out to provide for the family. And of course, to raise that size of family, you need fairly significant income. And in Alberta, we go to oil and gas to make that money. And we 100% bought into the Alberta dream, believing that if we put our head down, went to work, sacrificed, working for a company, we would be able to create a lifestyle that we work so hard to build. And that actually did happen for us. He landed a job with a startup company. For the first time, we weren't living hand to mouth. We were able to put away savings, but it was very stressful on family life. I was basically a single mom. He was in camp all the time, but we thought if we could just hang on and do this for another 5-6 years, we'd be totally debt free, have no mortgage. And then we could pull back and start focusing on actually living that life we worked so hard to build. And at that time, he'd been with the company about a year. We went on a family vacation, and we hadn't been anywhere in 10 years, actually. And I like to joke it's because going on a vacation with that many children, it's not
Yeah, it's a little crazy, a little crazy.
Leave me home, take my kids. That's a holiday for me. But it was a family reunion, and we were in a position to actually go, because oil and gas, you don't take time off. If you're busy, they don't let you go. They will replace you. And if you're not busy and you have the time to do things, you actually don't have the money because you're usually laid off. But circumstances were favorable. We went, and unfortunately, he was injured while we were there. We didn't realize how serious that injury was. And we came back to Edmonton where we were living at the time, and he checked himself into the emerge at U of A. And he didn't come back out. They put him on standby for emergency surgery. Turns out he ruptured the bicep muscle, which involves extensive surgery, drilling through the bone to reattach it. And the outcome of that was 3 days home from the hospital. He got the layoff call. And at that time, there was no other options to go to work because he wasn't able to work with the injury. And if it could go wrong in that time, it absolutely went wrong. Our well collapsed, basement flooded, furnace went. We had $40,000 worth of repair bills. Very quickly drained our savings, and we were starting to use our credit card and line of credit just to put food on the table.
Wow.
And when he was able to go back to work, unfortunately, that was 2014, the fall when oil and gas went sideways. There was no jobs. So he was just lucky to get back into the field, but now earning half as much. And we were falling behind. We were leveraged to the nines because that's what we were taught to do. And we were starting to miss payments. Renters had moved out, and we had no solutions. But because we had tons of equity, we thought if we can consolidate this debt, we should be fine. We went to our bank and he said no, turned us down, said, "You don't qualify. You do not make enough income to cover your debt anymore. All we can recommend is you sell your house." And it was at that time we were actually introduced to WFG, sat down with an agent. He looked at our finances, said, "Lisa, we can absolutely qualify you." Took us to a different bank, freed us up $900 a month. And there's no gracious way to say this. I am to this day, I'm still pissed off because now I know our bank could have done the same thing for us years before,
Mhm.
but they looked at the zeros behind my husband's paycheck and we were sold high interest debt. And so I'm very passionate about what we do. If I had known 20 years ago what we know now, it'd be a totally different situation. So I just love bringing that education, and especially for women in marriages in general as well, because we all know the number one predictor of a breakdown in marriage is financial stress. And that became my situation. So through this journey, I became a single mom and having to support myself. So learning how money and finance works has absolutely changed my life. And I'm so excited to bring that forward to other people.
Oh my gosh, I love that. And what a relatable story, though, and not stereotyping a little bit yet for women, right? To actually educate themselves and know what their options are. And then, of course, for everybody as well. Yet, I think that's so crucial. I'm excited to pick your brain. And so, what would you say? Okay, so that's how you obviously went because you needed it for yourself, right? And then you started to educate yourself and you started working with this agent. They were supporting you, which is amazing, and then you started actually being in the financial field yourself and starting to earn income and be empowered and get yourself out of that crazy situation, which I'm sure didn't happen overnight. Yet, what would you say, Lisa, to somebody who's sitting here thinking, you know what? I need to learn more about my finances. I think it's time I start educating myself. Yet, it's so overwhelming. I don't even know where to start. What should I do? What would be some guidance or tips you would give somebody to just simply get started?
Yes. That is such a big question. There's so much. I think just starting out with looking at goals. So, what are our short term goals? Are we looking in the near future? Maybe we're looking at going back to school or going to school, purchasing a house. Or what are our financial goals in the short term as well as long term? Because eventually we want to stop working someday. We want to have enough money saved. So, it's really important to look at a big picture and all the areas in between. And then also looking for somebody that you can work with, somebody that you can build a relationship with, that you're going to trust, that's going to be there long term, because our goals are going to change as we go as well. So helping us to navigate all those ups and downs through the journey. And then we can really start looking at, based on our goals, what are the best areas for us to be in that are going to support those. And again, they can change down the road. And even probably more importantly, than that somebody that's going to educate us. So giving recommendations, but then we actually understand why those recommendations are being made and we can make an educated choice of whether or not that's what we want, the direction we want to go that's going to support our goals.
Yeah, that's great. Can you talk a little bit about like client broker relationships, let's say, for example? Maybe just touch on that. How important is it that you do your due diligence and find somebody that you can trust who is going to educate you, have your best interests at heart, and give you guidance that is for your goals and what you're looking for? How important is that relationship?
Oh, yeah. Incredibly important. Absolutely. The most important. For myself, health and finances, these are probably the two biggest factors that affect our well being as we're on this journey. So, just like in the medical profession, we want to find a doctor that we trust that is able to work with us on a personal basis, not just a cookie cutter approach
Yeah.
that is actually looking at our personal situation. Same with finances. We don't want a cookie cutter approach. We want somebody, again, that is going to be there long term and invested in us to make sure we're reaching our goals.
Yeah, I love that. I love that. Okay, so let's say somebody's like, okay, I've found somebody, or they come and they're working with you, and they're like, okay, I'm here, I'm here. So now, what are the different areas of growing our money that we want to look at? I know you have a financial structure you'd like to walk through, but what areas would we start to look at, or would be important to look at? I guess I should say.
Sure. Yeah. The different areas that we educate people on where we can grow our wealth in Canada, it's very different. I hear this a lot. Oh, the States has so many different, and it's different in Canada.
Thanks for
But
bringing that up. Sorry, because the reason why I also wanted to have this podcast episode is because my girlfriends, I want to learn more about money, yet there's only United States information out there. What about Canada? Thanks for bringing that up, Lisa. Yes, in
yes,
Canada.
yeah, absolutely. So we call it our financial house. That's just the phrase we've coined. First areas would be the home. That is, for most Canadians, going to be the major purchase in the lifetime. So we want to make sure that we're actually getting our clients qualified for the lowest interest rate that they can qualify for. And I'll just do a little side note. So we need to understand how the financial industry works. It is a business like anything else. When we talk about banks, it's retail banking. Like we're being sold products in the financial industry. So we want to make sure that what we're using is absolutely best for our situation. And again, we work with the banks, we work with all the institutions. It doesn't make them bad. They're very good at what they do, earning profits. We need to be aware, we need to be financially savvy. So, the way the traditional industry works is mortgage brokers or mortgage specialists in the banks, we get paid on the actual mortgages that we put in place. So, if we have a quota, we will get a great rate for our clients to make sure we hit our quotas. But then if our bonus is tied to over and above that, then, we're going to try and position our clients in areas that's going to serve our bank account as well. And again, it doesn't make it bad. That's just the way the pay structure works. So we do something very different. We want to make sure that it's the best mortgage for the client, regardless of the commission. Mission before the commission is our motto, actually. And thinking about that, like cash is king. So in Canada, it's very cold. We need a roof over our head. And if we're investing all of our money inside a house, I mean, that's great. We do build equity, but the only way to access that equity is we either have to sell the house or we have to have the ability to borrow against it. And again, in my situation, even though we had 20 years of equity, over 300,000 in that house, we were told no, you cannot qualify it. And we almost lost it in 3 months of not being able to work. So cash is king. We can save money, not going to high interest, and it goes into an emergency fund or other areas, much better. Next areas are the actual investments. So whether it's RSPs, non-registered accounts, tax-free savings account, first home savings account is a new one. These are all different investment vehicles. We can put the same passengers, if you will, inside the vehicles, whether it's stocks, bonds, mutual funds, GICs. The difference is the rules how the money goes in and the rules how the money comes out. And then lastly, there's insurance products, and we deal with all types of insurance. But most specifically, we look at critical illness insurance, which is designed to replace our income if we get injured and can no longer work. Actually, when I started working, The stats were 1 in 4 Canadians would develop a critical illness in their lifetime. 9 years later, it's now 1 in 2 Canadians. Like it's incredible.
That's crazy.
And then disability insurance designed to replace our income if we get injured and can no longer work. That was my story. Because of a few months of not having income and coming in, we almost lost everything. So I talked to everybody about that. And then, of course, life insurance, which isn't so much for ourselves, but it's to leave the family protected if something is to happen to the primary wage earner. So these are the basics. And again, looking at these areas, is everybody in the right investment vehicles for their situation? Not necessarily. So we want to make sure that for your situation, you're using the vehicles correctly that are going to serve your goals.
Okay, wow. Okay, so let's dissect these a little bit. So I'm just curious for somebody who, I guess, like you said, it depends on someone's goals, their age, possibly what they're looking to do. But if we're just looking at the different kinds of ways to save, what's the difference between, talk to me a bit, what would you recommend would be the most basic? Is it a tax free savings account? Is that what you would share for most people? What would you recommend generally for somebody who's coming in and they're like, listen, I just want to start putting away some extra income? What would be the best way to do this?
Again, never a simple answer. Because it really does depend on the situation. As a rule of thumb, if you're getting money back on your income tax returns, for example, you probably don't need the tax advantages of an RSP. Absolutely. A TFSA would be a better vehicle to start saving money. And by the way, because most Canadians do not know this, the TFSAs that we get offered through the traditional institutions are very low interest rates, maybe 1, 2, 3. But right now, because interest rates are high, we're seeing them a little higher, 4%. However, in the traditional vehicles where we're looking at mutual funds inside RSPs, getting 8, 10, 12% rate of return, we can get those same returns inside a TFSA as well. But we need to know what to look for and the correct questions to ask and not just be offered what's the retail banks are offering
Yeah.
in that particular season.
Can you explain more? What is the difference between an RRSP and a TFN? Like
Sure.
what would be the difference between the two and why would you choose one over the other? You touched on it a little bit there.
Sure. So in RSP, we get a tax deduction for the money that we invest inside of that. So for example, just using the round number, if you have 100,000 in income per year and you put 20,000 in RSP, now you're only paying income tax on 80,000. So that 20,000 gets tax deferred. So inside the RSP, it will grow tax deferred. We don't have to pay taxes on it. But now when we go to withdraw the money in RSP, we're paying tax on everything that we withdraw. So that can be a significant tax burden on us when we hit retirement age. So we want to make sure that we're only using that vehicle if we absolutely need the tax deduction now on our income. So for most Canadians earning under 80,000 per year, not necessarily a great vehicle. So a TFSA, for example, then we don't get a tax deduction for investing the money in there, but it will grow for us tax free. And when we go to pull it out, we're paying zero tax on that. So again, just thinking in round numbers, if we had $1 million saved for retirement, where would we rather have the bulk of that money saved? In an RSP where it's fully taxed and the government's probably going to take 30%, like 300,000 of that in taxes, or a TFSA where we keep the full $1 million because it was invested in after tax monies. So this is things that we want to look at when we're looking at our goals for the future. What are our immediate needs as well as our future needs?
This is so interesting. And I'm probably going to ask some questions that seem silly because I'm learning and I'm ignorant to some of this stuff. Yet I'm thinking of my parents, right? Like they're always like RRSPs, RRSPs, because they've always gone to the bank for their education. Do banks have TFSAs? Because I don't think my parents have ever put their money in there. And that would have been smart for them to do.
Oh, yes. Yeah, absolutely. They do. They do. And again, as a side note, understanding retail banking, they also have their seasons. So they have their seasons where they need to sell RSPs. They need their seasons where they sell credit cards. They have their seasons where they sell mortgages. So to be aware of what the industry is doing so that you can go in with that knowledge prepared for what you need
Yeah.
because they can give it to you.
And I'm curious because as I'm speaking about my parents, have you seen since you've been in the industry, has the guidance and the recommendations and the education changed or has it really stayed the same? Like what you would recommend today, is it different than what you would recommend 10 years ago?
For myself, no. No, this is what's really beautiful about it is once we're able to learn, it really doesn't change,
Yeah.
right? It's the same concept. So now it's just the application of it that becomes different where we tailor it to what the needs are in the moment. The only thing that is new, which I will touch on, is the first home savings account. So this is brand new. It just launched. We had access to it in April of this year. Um, What's great about it is we can use that for first home buyers in lieu of using our RSPs. So with the RSPs, we have the ability to withdraw money from there up to 35,000 to put towards our first home purchase. But the caveat is we have to pay it back. So if we do have 7 years to pay it back, and if we don't pay it back, then we're charged income tax on the money that we keep, which again, it's not necessarily a big deal if we don't do it. That's another story to go
Yeah.
into. But with a first home savings account, when we put the money inside that vehicle for our first home purchase, we still get that tax deduction. So the limit is 8,000 per year, but now somebody making 70,000 only has to pay taxes on 62,000. But when we pull that money out for our down payment, there's no taxes. So it's a great new vehicle that the government's
Oh,
implemented.
that's awesome. And just helps first time home buyers, right? Because everybody who's a first time home buyer could use a little bit of help. So that's cool.
Yes.
Okay. So I also just keeping on this financial structure, right? About the different areas. Just I have another question before we move forward because you surprised me with those stats about the critical illness, right? That one out of every two, because I have to be honest, I haven't ever gotten this kind of insurance because I'm like, it's so unnecessary. I'm like, why would I be putting money away for something like this that's so unnecessary? So maybe educate me a little bit more on why it would be important to have this kind of insurance, all insurance, life insurance, critical disability, because some of it in my mind I literally think it's why would I do that? Like it's not necessary. But those stats like really surprise me.
Yes. Yeah, no, we always think it happens to somebody else. It's stuff that we hear about. And yet, when we do have somebody close to us that either a disability or an injury, it is financially devastating because we need to take time off work to be able to get better. So, this is the good news. So, even though those stats are increasing because of medical advances, we are actually surviving, but we need to take that time to get better. So, with these insurances, there are actually products available where you can use it as an investment vehicle. So you pay a little bit higher premium, but then if you never need to use it and then come retirement time when you cancel it, you can actually get all those premiums back tax free. So think about it of say 1 year's worth of income replacement would be a good base way to start with a critical illness. So say maybe that's $50,000. So we're paying the premium into that monthly. If something were to happen, boom, we get $50,000 in a lump sum, tax free to use however we need to do that, whether that's continuing with our bill payments. Maybe we want to go to a different country to get special treatment, whatever that is, we can use it tax free. But then if we don't use it, which is the hope, we never need it, that coverage has been there. And then when we cancel it, everything we've paid into it, it's like a forced savings account. We get the money back.
Mm, okay. See, that's so interesting. This is why it's important to talk to a financial professional.
Yes, I never knew these existed. I had no idea. And I remember that as well. So when my ex-husband was off work, and this happened frequently when he would change jobs. So we always had group insurance. And there'd be a few months where we had to wait that qualifying period for those benefits to kick in. I always remember being so stressed out. What if something happens in this time? And I had no idea we could actually get that on an individual basis somewhere else and very, very affordable.
Yeah.
Very affordable.
Yeah, interesting. Okay, so what would you say to someone? So I'm sitting here thinking, so many people right now, finances and money can be scary. And I think that sometimes there's a mindset of, I would really love to start saving and investing, yet I have debt. I don't have the money to give. There's this mentality, right? I think it, and I think it, a lot of people have it. And so I have a two-part question. What would you say to somebody who comes to you and they're like, I don't think I can because I'm in debt? Right. Yeah, that's probably the best time for them to start looking at these things. Yeah, they come to you and they're like, oh, I don't think I can because I'm in debt. And then the second part would be, what are some effective ways or some guidance you would give someone to start to manage their debt? Like maybe high interest with credit cards or things like that. So let's talk about debt.
Sure. Okay. So I'm just going to backtrack and get a little bit of a foundation for what I'm going to talk about. So there's something very, very cool called the Rule of 72. You can look up a YouTube video, they explain it, but it's basically compounding interest, and it explains how the interest rate that you're earning on your investments, you divide that into 72, that will give you an average of how many years it takes your money to double. So, say, for example, we get an 8% rate of return on our investment divided into 72. We know our money's going to double every 9 years. Great place to invest. So, we want to be looking at that with investments. But then we look at the debt side, that piece of plastic, that credit card we get from our financial institution to borrow money. Average interest rate is 19.99%. I actually think it's gone up now to 21.99. But if we take that interest rate divided into 72, our debt is doubling every 3.5 years.
Crazy.
So if you ever carry a balance and you look at the statement of your credit card company, it will say something like, if you continue to make the minimum payments, it will take you 60 years to pay this off, something like that. So this is the other side of finances, is we want to make sure we're getting people out of high interest debt to make sure that the money that we're earning is working harder for us. So this is another area that we look at, is ways that we can reduce how our debt is working so we can lower those payments and get it paid off faster and potentially free up cash flow. Like I mentioned, in our situation, $900 a month, Kelly.
Hmm.
Between our mortgage, between our line of credit, between our credit card, between the vehicle payment, we were able to lower those interest rates and free up $900 a month. That's incredible. I've had a family, one of the first families I worked with, actually good friends when I was brand new and independent. It was $1,300 a month. I was
Wow.
able to free them up. And $1,100 of that we reinvested into a tax-free savings account. So number one, that's the first way. So when we are stretched and we don't have any extra money, let's take a look at what's happening in the debt and even the taxes side. Where can we reduce that and free up cash flow to in turn reinvest it, or even just put it back in your bank account so you have it month to month and are really struggling?
Mm. How do you do that? Like, how do you reduce someone's debt?
So there's many different ways. Again, a lot of times it's just simply going with another institution that will offer them a lower interest rate. Sometimes maybe it's consolidation. There's a lot of equity in the home or even equity in a vehicle. Did you know this? You can actually wrap up credit card debt by refinancing your vehicle. You can get up to 160% financing. So where we just actually had an example of this, where a product provider came in and was training, and I think they freed up something like $700 a month by putting the credit card debt into the vehicle. And then, of course, now in turn, they can double up the payments on the vehicle and pay everything off within a few years.
Yeah, that's amazing. So I'm just sitting here thinking, I think like one of the most important pieces of what we're talking about, I feel, is for people to not have funny energy around their money because there's so many options available if you're willing to be vulnerable and go and talk to somebody. Because do you find that, Lisa? Can we talk about the psychology of this for a second? Like that so
It-
many people are sitting in stress and hardship and debt, yet they have a fear or a looking good program, or I don't want to go and talk to somebody and be an open book about here's my situation. Yet that might be the one thing that's stopping them from actually finding solutions.
Oh, yes, 100%. I really find there's a lot of shame around money and finance, even looking at my own situation. So I remember sitting down with the broker, giving him the details and having to tell him, oh my gosh, yes, we got 7,000 on this credit card. Oh yes, now our line of credit is at 30,000, and feeling so much. And it was so beautiful that how, as he was going through it, it was just so neutral. And he gave me great feedback on the great things and really reassured me. So working with somebody that makes this normal, and I'm going to give this example. So again, thinking about healthcare, if we have something happen to us and we have to go into an ambulance, and maybe that ambulance and driver needs to expose our chest to be able to get the medical attention we need, they're going to be very normal about it. It's really help that client feel comfortable. So working with somebody that helps us feel comfortable, and again, realizing this is very normal. This, I find this laughable. Sex used to be taboo,
Mm.
and now we have no problem talking about it. But money and finance is still taboo. And it is something that we use every day. And isn't it incredible that we feel ashamed to learn how money and finance works when we literally cannot do anything in this country without money?
Yeah, it is so crazy. I find that really crazy, to be honest. And this is why I wanted to have you on the podcast, because I want to start talking about it and do my best to take the stigma away from the shame, right? Because I think a lot of people do come from that place. And if we're not willing to take a look at what our point A is with money, we're never going to be able to shift our point B, right? And
Yeah.
so speak a little bit about this. Okay, so what I want you to speak on is, I know that either you and I have talked about it or I read it in some of your material where there's such a high cost of waiting, right? So to piggyback on this, where you're sitting there thinking, I could really use some guidance and support, or there your inner voice is saying, hey, I would really start to look at investing, and we have all our roadblocks around it. Yet, what is the cost of not taking action, of not going in, getting financially educated and starting to put some measures into place?
Oh, yes, absolutely. Again, even just referring to my own situation, had I known, had I understood, we would never have been leveraged to the nines. We wouldn't have been in high interest. So, taking a really honest look of what's happening in our financial houses to see where there's areas that we can tweak. Where, think about it, we work so hard for our money. Doesn't it make sense that we get our money working for us? So, by clearing up debt and getting invested. And there's no better time other than yesterday than today to start investing, because time is our greatest ally. Time in the markets, this is the rule of 72 again. Our money will work for us naturally if we just give it time. So the younger we can start, even if it's $50 a month, the better. And I hope that makes sense. It's really difficult to do without drawing it out, how that
No
really
worries.
how it
No, it
works.
doesn't make sense. Basically, get started now, people, right? It's never too early and it's never too late. Just get started now. And what would you say? I'm curious because a big part of my audience is entrepreneurs and small business owners. And I know you had shared with me that you have some guidance and tips for people who are in business, maybe around taxes and things like that. Yet, if you were to give two or three tips or pieces of advice for people who are in business, what would those be?
Oh, yes, absolutely. And again, I'm really delving into this the last few years. I actually think this might be an area I start to specialize in, is just working with business owners because of the strategies that are available that, again, we are not able to get through the banks, traditional industry. And some of these concepts are insurance tax shelters. So thinking of insurance as investment strategies. So there are products out there, whether it's critical illness or life insurance, where the corporation can actually pay for that insurance tax shelter. And then if we set it up correctly, we as a business owner can then access that tax free in retirement time. So it's corporate stripping strategies that the government hasn't closed those loopholes yet. But again, we need to understand how they work. And we work very closely with business owners, accountants to make sure that the strategies work within their timelines and their budgets and what is sustainable for them. But it's incredible what's available out there. Incredible
Interesting. Do you have any other tips? That's
for
a good
business.
one. Yeah.
Yeah. Well, again, the same
What
thing,
else?
working with a financial advisor in addition to the accountant, because very different professions. So I get this feedback from a lot of people. Oh, yes, no, we actually work with an accountant. We're fine. Okay, but their job is actually very different.
Mm.
And what my job is, their job, they take the numbers you give them and they organize them in the lines and make sure everything's lining up. But it's not necessarily their job to give you the advice of how you can use other strategies to make those bottom lines and all those little boxes that you got to check off work better for you.
Yeah, that's actually a good point too, right? Because I think I've even said that to you. Oh, don't worry. Like I'm talking to my accountant, right? And also understanding there's a difference there, right? Around the education and who's going to guide you with different areas and strategies and what you're looking to do. What would you
Exactly.
say to somebody who wants to start saving for the long term? Like obviously when it comes to retirement, the retirement side of things, that's also an important topic. So we've talked about what to do with getting started. What are some of the various areas to look at to grow your financial portfolio? What to do about debt? Obviously, if you're in a business, you want to start looking at the different benefits for yourself. What about sitting here now as we are? What should we look for or be thinking about when it comes to actual retirement money?
Yeah. So definitely first starting point is to find out what your retirement is actually going to look like. What do you need? What do you plan on doing in retirement? Most people, because now we have freedom of time, like I think there's a delusion that, oh, my kids are grown up, my house is paid off, I don't have bills, I need less. But in reality, we have more time to do more. So we probably need the same amount, if not more, to do all those things that we've been waiting to do in retirement. So finding out what that amount you need saved to actually be able to have that lifestyle you're wanting in retirement. And again, just a side note, we have one of these slides in an old presentation. For an average couple to eat 3 square meals a day over 20 years of retirement, and those meals only costing $5 a day. So we're not talking fancy steak and lobster, just very basic. A couple would need $210,000 saved in retirement just to eat. So how many people think about that? So these are the areas we want to look at. And then, so how much money do we need to start putting away on a monthly basis to be able to actually reach those goals? And where can we free up cash flow that's going away unnecessarily that maybe it's not the most important place for us. We don't even know it's going there and we can reallocate that towards our goals.
Yeah, I love that. And obviously, because I'm really personal development driven, it's first of all, what do you want your retirement to look like? And I see so many of my friends, parents, my parents, they've downgraded their lifestyle because possibly they did the best they could to set themselves up to win for retirement, but they don't have the money to live the lifestyle that I know they would have envisioned for themselves. And so I think that's important. What do you want your lifestyle to look like? Don't put your head in the sand around it and start to put measures into place now. Because I mean, my hope is for myself and everybody I know when we retire, our quality of life goes up. Right? Our
Ye-
quality of life goes up, not down. Lisa, what would you share? Just is what do you want to talk about when it comes to finances? So I know I'm asking you questions, but is there anything that you want to bring up or share or make sure that the audience hears? What else would you like to talk about when it comes to financial education?
I think you said that very well is not putting our head in the sand around this, like really taking ownership and responsibility for our finances now, wherever they are. Like again, it's not good, bad, right, or wrong. Just finding our point A, and it's really exciting at what's possible. That's what's great. That's what I love about this is actually being able to reallocate and crunch numbers and find solutions because there's always solutions. And it might take a while. Maybe we have to work with somebody for a year or two to get to even ground again, but it's possible. And the longer we just pretend it doesn't exist, it actually compounds the wrong way. Yeah.
Yeah, that's so interesting. What would you say? Because I just felt your passion there as you were talking. What's the most exciting part of what you do?
Oh, yeah. Just possibility thinking. I think that would so possibility thinking of we didn't know what we didn't know. And wow, look what's possible. I didn't even know I could do that.
Yeah,
Yeah.
I
Yeah. It's
love that.
great.
I love that. And it's a great way to look at money, right? To take the stigma off of it. Instead of looking at it from a fear perspective, look at it from a possibility and a hope perspective. And so I think that's a shift in mindset as well. And just a few last questions, Lisa, before we talk about yourself and where people can find you. I want to just make this about you for a second and just pick your brain about yourself and your lifestyle and your journey. What we know based on what you just told us is you've got 11 kiddos, right? And then you eventually took ownership of your finances and your life. And now you're a powerful, successful businesswoman and mom. Yet my question for you is when it comes to success, what would your definition of success be today? Because I'm sure it's changed as you went through these different chapters of your life. Yet, what would you say success is for you now?
Oh, again, so many things. Where do we start? So for me, what's really important to me is never having to say no to my kids because of lack of money. Right? I might say no for other reasons, but it's not because I don't have money. And really building that mindset around money because again, my experience has been when we take responsibility, we have that possibility thinking, the doors just keep opening. So I definitely haven't reached the level of success I want, but flexibility, the freedom, another side, I've been dealing with long COVID for 2 years. It's really been a struggle, yet I've never had to worry about money. Like I've made as much money as my ex-husband barely working, right? And being able to focus on my health. So that freedom that having financial stability brings is definitely a big part of success. And I think we don't talk enough about the trauma that's caused by financial stress of not knowing if you have enough money to make it through the month. It's seriously taxing on everything. So success, yeah, and the ability to create more if we want more. That's a big part of it too. Are we in a position? Are we in a vehicle that we can get to our dreams and goals, and we have the flexibility to course correct if we want to, because it's maybe not serving us? Really, that's success. In one word, would be freedom.
Yeah, I love that. What would you say to the listeners who are listening and they in the community that we have and they hop off the call, and if you were to give them one like action item or hey, go and do this week based on your message today, what would the one piece of action be that you tell them to go and do? Like a call to action.
Okay, number one would be just get a budget sheet and track your money for a month to see where it's actually going. And that includes all the hidden fees that we maybe don't know we're paying, such as there's things called life protection or creditor protection insurance that's we're maybe paying on our credit card bills and our line of credit, mortgages, that there's better options out there. But literally look at where every single dollar and penny is going so that you have a point A, and then from there you can evaluate, is this where I want my money to go? And is there better places? So just creating awareness.
Yeah, I think that's awesome. Great call to action, everybody. I started doing that about, I think a year ago, and and I avoided it at first because I was scared to know, right? So if you're feeling like that too, you've been avoiding it, it's okay. I was there too. Yet once I started to track, it really empowered me and I was able to make better choices and feel better about my money and actually grow it. So that's a really great piece of advice, Lisa. Lisa, I'm sure that my community and the people who are listening have enjoyed this. We can talk forever. I know that we've just touched on most of
Yes.
this stuff. And so my recommendation is for everybody who's listening to reach out to you and actually schedule time with you and come personally with their situation around what they want to do for savings, investings, where you can help save them money, where you can give them guidance based on their goals. So if they were going to want to reach out to you and have that consultation, how do people get a hold of you?
Oh, yeah, for sure. So I do have a website that has my contact info on there. Just as a side note, though, use the mobile phone number because the other one is the office number, and that's got to come through a few people before it gets to me. So definitely my mobile number, and texting is probably the best way if it's just a quick text to find a time that we can actually call because I know people are busy. So it's hard for people to find time. So if I know that they're wanting to with a quick text, then we can find a time that we
Awesome. So we'll put that information in the show notes so that people can access your information. And Lisa, just thanks for being on. This was such a great, informative, educational episode around finances, and it's piqued my curiosity. And I need to learn more. I want to learn more. But I think that, like you said, we've got to start talking about money so that we can all be able to breathe and put our head on the pillow at night and alleviate that financial stress. And thanks so much for coming on and just sharing all your wisdom and insights and nuggets.
Awesome. This was so amazing. Thank you, Kelly. Love
Yeah,
it. Love
no,
it.
I love having you on here. I just in closing, I would love to have you back because we can really start to pick at some of these different areas we talked about and probably have whole podcast episodes on each of the different areas.
Yeah, absolutely.
Yeah. So
Absolutely.
maybe we'll do
Incredible.
like part 2 and 3 and 4 for those of you. If you're listening, please comment in the podcast that you're listening or on my YouTube channel and put your questions in there. Lisa scratched the surface, but put questions in there that you have or comment what you want to know more about or comment if you enjoyed this so that my goal is to service you guys, the listeners, the audience, my community. And so if you want more financial education, let me know and we'll have Lisa back. And so Lisa, just thank you so much for being here. I appreciate you. Thanks so much. And congrats on all your success.
Thank you so much, Kelly. This is great.
Thank you, everybody, for listening to today's episode with Lisa. And the message that I hope you all get is really just checking in with yourself with where is your financial education at? And that it's never too late to start learning about what to do with your money. I'm 47 and I feel like I'm still learning so much about what I can do with my money, where I can put it, where I can invest. And I'm just taking the time to educate myself so that I set myself up to win. And some of you might have been doing these things for a really long time. Maybe there's the next level of understanding for yourself about what to do with your money and finances. And I just encourage everybody to make sure that this is a part of your daily practice. And so if you have questions, please reach out to Lisa or find a financial professional if you don't have one and start educating yourself about your money so that you're set up to win now and for the future. And once again, if you guys can like and leave comments, if you want to hear more material and episodes around financial wealth and health and what to do with your money, please let me know. I want to make sure that you're getting value from listening to these episodes. And so like and comment, download. And if you're listening to this on YouTube, please subscribe. And just thanks again for listening. With love, greatness, and success, it's your host, Kelly Beveridge.